simply part of my personality. And the best way I can manage that is to trade those markets aggressively that fit my personality, which are fast-moving markets. The other part of the trade that's become difficult is the short side of the trade, right? In a bull market, which we are undoubtedly in, right? We're at new all-time highs. New year-to-date highs. I'm not sure if that's new all-time highs adjusted or not on the S&P, but importantly, the intra-day volatility is incredibly important for us if we're going to trade the short side of the market in a bull market. Okay, so that means that we have to be willing to surrender or wait until we see those that rotation size go back up. So in your notes or in your trade plan, there should be somewhere in that trade plan something saying, hey, I want to see X amount of rotation back and forth before I take the other side of the trade, because there's a flip side to this lack of rotation when we go back to the downside, which is if we don't have responsive buyers step back in and we start rolling to the downside, right? We could have, if you recall back in late January and then again in April, right? We can have some pretty vicious moves to the downside in a bull market, right? And if there's no counter rotations, we'll just end up having the same problem we have on the way up, which is we're getting to zones, we're sitting there and we're stopping. So we want to do two things in preparation for that. The first thing is we actually want to be able to visually see the if you're not a super aggressive trader, right? You actually want to be able to visually see these trades hitting particular areas and getting rotations back up. That'll be your first sign, right? Where you visually see it without risking your own capital, that hey, the trades are actually working. Okay. The number two thing that that we would like to see is an expansion of the range intraday. We've been at what? I think yesterday we had 5 points, 6 points total through, and particularly through the morning, I think it was just under 5 points range. So we want to see, the first clue will be, hey, we have more than 5 points this morning. Okay, now let me see if I can start looking for some kind of rhythm that the market's following. The next part is, for guys, especially I know that I've been, if y'all been coaching with me, we've been pushing trade size up. A lot of y'all have been doing really well over the last 2 and 3 months, and you have pushed trade size up. This is an exact time where you may want to go, I'm going to trade a quarter size while I'm pressing the different parts of the market to test, right, without testing with my full size. As soon as I see the rhythm pick back up and I see the responses in the zones, right, flip right back to your old size. There's no problem with doing that. But it's a way we continue to participate in the market and kind of probe. And if you're getting stopped, like I did yesterday on the NQ trade, I took it on half my normal size. So it, in essence, ended up being a minus 2.5 point trade. And I had taken some scalps prior to that, so it actually ended up being, it wasn't a great day, it wasn't a bad day. It was just pretty much a nothing day. But it allowed me to probe and participate in the market and stay focused on what's going on within the market without exposing myself to getting run over or taking a big drawdown. So I wanted to address that as part of the trade plan. That should be part of your trade plan right now. You need to address two issues with the slow market. First of all, emotionally, how you're feeling. And the last piece I want to touch on that because I was working with my trading coach on this last week. I'm actually getting agitated and angry, actually would be the correct word, at the lack of rotation in the market. The reason why that is because I feel two sides of pressure in my own trading. First of all, it's not generating the profits that I'm accustomed to getting on a weekly basis, and my cash flow is off significantly versus what it is on an average week. The second part of that is it's hard to lead you guys through difficult markets. I want to look good to you guys. Now, that's not as in saying, well, Simon, you shouldn't feel that way or you do feel that way. The reality is that is what I am feeling, is that I want to be able to lead y'all to trade well, which I am doing. But in the back of my head, there's also that thought that trading well also usually leads to P&L, and that part, the rise in P&L, is not occurring. I don't have to fix that. There's nothing to fix there, but I have to acknowledge that I'm feeling that way so that I don't catch myself going overboard or trying too hard to push to promote either myself into taking a trade and then calling that trade to others, right, that may not fit the profile or may be a trade out of frustration, right? And then the second part of that is for me not to move to feeling responsible for someone else's trading activity or trading decisions, right, which is it's a blurry line from where I stand, right, because I'm halfway my goal is twofold. One is to both show you the techniques, but the other one is to keep you focused on what the end game is. And so simply by acknowledging that, I can let go of the frustration of, hey, we're just not getting any trades develop. We're just not having the trades develop the way they normally do. And what I want to do is instead guide y'all to a safe harbor where on the other side of this, the range will jump, the volatility will return, and we'll be able to get those 2 points. If I can guide y'all through this where there's not a significant drawdown in that period of time and maybe even a little bit of profit, that's where you'll see your account again versus in periods prior where you might have taken a drawdown from getting chopped in a period like this, or instead if you trade flat to slightly up, when the market comes back to good volatility, which it will, and probably in the next week or two at the latest, right? We usually don't stay in these funks. While we've stayed in narrow trading ranges for 30 days, they get punctuated every couple of days by larger volatility bands, right? And if we can stay neutral until those days appear and then take advantage of the market the days where the volatility does appear, right, you'll see at the end of that 2 weeks, wow, it was pretty boring, but there's actually a pretty big jump in my P&L and in my equity. And that comes from abstaining from trading when the markets don't favor us. So I wanted to cover that into the trading plan. I think it's actually pretty important relative to where we stand right now. Now, the other thing that I noticed this morning is that we were up. Finally, we would trade overnight at 1914, I believe was the high, so I'm going to have to adjust the zone a little bit. So now let me make the adjustment here since we're clearly not opening at 1914. So move this. See, this is going to end up sitting right on top of each other, which is what I didn't want. Okay, so get rid of the 1915 and 3/4 on the chart. Move this to 1914 even. Okay, the dotted line is going to denote the actual Globex high. Okay, and then we're going to simply make it, because the ranges are so tight, we're trading at 1908. I'm going to make it 1912.50. I'm going to take it 2 ticks off the zone. Okay. Obviously, in terms of short this morning, I want to get if I'm going to take a short and try it on the downside, I want to get as close to that 1914 as humanly possible. Okay. So next, let's look at the lower end, 1908. I know I'm going to have to lower this here in a minute. And interestingly, we've almost pre-market trapped below Tuesday's high, so we'll adjust for that in just a second here. And let me get my drawing tool out really fast. Didn't want that. Okay, 1908.25. So what we are going to do, okay, so in essence, let's see where Globex low ends up. We're going to leave this alone for a little bit. Let's see if they'll roll it down to 1905 prior to the open, which would be great. So something of interest here. Okay, so essentially what we're ending up with pre-market is a trap above for overnight Asia. We've ended up trapping above this 1910, a whole group of people all the way up to 1914. Okay, so what I want to see is 2 things this morning. First of all, I want to see if we can get back above 1910. If we fail to get above 1910, essentially what you have is a trap from 1914 to 1910, and it would actually open us up to a downside move back to the downside, right? So the first thing I want to know is, in terms of if we're going to correct, which we should, remember the other day, let's go to a larger chart here really fast, or actually let's just go to the volume profile. It'll be easier to pick it off. Oh, and you know what, guys? I apologize. Let me take a second to pause and send out the file so the guys who need the TradeStation file can actually have it here really fast. And also, interestingly, I've been watching CL this morning. You can see CL is actually starting to make CL is a good indication of risk on, risk off environment, and you can see there's a very loose correlation. Okay, there's not a direct correlation, But if you look at CL on a 60-minute chart, well, I'll have 30 minutes here. We'll see if that helps. Okay, so you can see CL going back to the beginning of the month, right, has just been on a complete rip to the upside, right? And we actually gapped above we finally got above this major resistance point that we were working against right there, and you can see it traded through really quickly. So two things there. First of all, I want trades through this area. If y'all, whoever's trading CL out there, remember we can slip through this 103 to 103 pretty damn easily, and if we can get underneath this slip, we actually have pretty good shot coming all the way back into this 102 area, although I doubt that it does it in any kind of linear line. But what this indicates in general is that it just tells us that there's a risk-on sentiment in all asset classes across the board when you see oil rising like this, okay? Because there's clearly, even if you can't associate all this with what's going on in Russia, maybe the spikes, but not much more, because it's pretty much not blowing out of control, right? It's just been a regional conflict, and it's grabbing news headlines, but there's really no threat from it. So this has still been climbing more on economic fundamentals than it has on any kind of news or war type situation. So enough on that. Going back to the volume profile on ES. Okay, so let's do a couple of things that we need to know right away. First of all, this move started from approximately here. So the first thing I want to know, bigger picture, what is half back? Okay, so let's just keep this nice and simple. Let's get rid of everything we don't need on here. Okay, so the first thing I know is that roughly half back is sitting between 1885 and 1878, right? So and that I also know that occasionally we can get a little bit further back than half back and still move higher. Also, the other thing that I noticed about half back is that a pullback into that half back would put me right into this prior area, this 1878.50. Remember, I kept pointing out as crucial to get above and hold above for the bulls, right? If we can get above that 1878.50 area, okay, we have a breakout. So what is a normal technical pattern? You have a base, right, which just certainly looks like an extended base, right? You have a base, you have a breakout. What does the market normally do? At some point, it comes back and tests that breakout and then continues on its happy way. We have to assume excuse me, we don't have to assume, but I do assume, in my particular case when I'm trading, that this is going to be the pattern. I'm not going to assume, I don't listen to any of that noise about we're overextended, that the market can't keep going up, that the fundamentals don't match the price. All this tells me right now is that we're breaking out, and until I see price action confirm and technicals confirm that we are no longer breaking out and that we're rolling over to the downside, right, I'm going to assume there's going to be responsive buyers all the way down in this. Why do I do that? I want to take y'all back to the lesson so that you'll stay focused, right? And I constantly come back to the market in gold because I hear people talking just the same, right? If we look at CL on a big picture, and we're going to do this very quickly on a big picture. Okay, let's go to 400. 480. Okay, that's a 480-minute chart. Format, symbol. Oh, that's CL on GC. Shift on GC. Okay. Where the heck? Okay. From the breakdown all the way here, I can't even, it's not giving me enough data yet, but it will. Okay. So what I want to show you is, if we could go a little bit further back here, let me, just trying to download it. Let me just see if I can flip this to a daily and see if that'll take care of the problem. Okay, there you go. People were calling for top, remember in bull markets, right? This is a perfect example where people were calling, we broke out, right? This is the breakout, backside test, takeoff. This is almost exactly, right? This little picture right here looks exactly like what we look like right now if you look like over on our trusty volume profile that we just had. Right here. Okay, we've broken out, right? It would make sense to come in for a backside test. This would also give us approximately a 50% to 62% retrace, and then continue higher. It, without considering the fundamentals, where I'm going with this, okay, is if you listen to people say it's overextended, you get frustrated by missing moves. I'm going to have 2 points for this, okay? First of all, it's not what I wanted. Hold on one second here. Okay, if we go back to this daily chart, the first thing I want to point out, through all of this, this is all pretty much directional and straight up if we look in here on a daily basis. When we initially broke out all the way back here we go. See how we got into this period where it just started having days where it was ripping, and everyone thought, well, you know, I'm not getting any, I was trading this at the time, and I would not touch the short side of this trade, right, until we finally got a significant break. But what you'll also notice is even on days, once we started to move back for the backside test, right, was that responsive buyers on most days had it pretty easy. Not all days, there were some nasty down days in there, right, but most days you see these wicks at the bottom, and it provided nice responsive buys, and if you waited a little bit, you actually ended up getting pretty nice setups to the long side all the way through this, okay? So right now in ES, we're caught in something that looks somewhat similar to this. The other thing you'll notice about this rip, right, is that there were actually moves to the downside that got responsive buys, okay? What I'm saying right now, when you look at this bigger picture, is that I don't mind taking quick shots in terms of scalps to the downside, but in terms of thinking about my trailers and long side moves, right, I'd rather, let's pretend this is ES for a second, I would rather be setting myself up in this market, right, to sidestep big down days if we're having open drives lower, which would be in a lot of these days, right, and instead looking to position my trailers, because when I got my trailers and moved up, you'll see how many of these days, look at all the green that closed up or near the highs and continue just dragging people up all the way through here, okay? This is always my concern. This is always my concern in bull markets, okay? And as far as I'm concerned, we're pressing those bull markets. It's not uncommon, right, to have nasty down days, and you'll need to have that highlighted in your trade plan, okay, that just because we have 1 or 2 nasty down days, or even a series, 3 or 4 down days, right, notice that the buyers are in control overall, and sidestepping these down days becomes the primary objective, and then leaving your trailers for the up days, because there's a ton more up days in bull markets than there are in down markets, right? What will cause me to change this concept of what I'm looking at right now? Well, let me show you. Okay. If we get back in, and I hope that was clear. If anyone has any more questions or needs more clarification on that, you're welcome to hit me later on in the day. And I may even go in and do a video on it to make sure everyone's clear. However, so this is where we're at on the daily. We have a breakout. We have an open gap sitting right here. Markets like to close the gaps, right? So I have an open gap sitting right there. We have another one. I think this is barely an open gap sitting right here. We have the prior range where everything was closing below this 1878 to 1880 level. We were opening and closing below consistently. So there's 2 areas we could come back and test. We could come back and simply do a backside test here, all right, close these one gap or both gaps, and do a pushback to the upside, or we could come all the way back in, do one more test of this range from the upside, and then take off, right? What will I say that we'll see that I'll say, hey, we're back into a established trading range? We'll close below here, and we'll stay below. We won't be able to get back above, right? We'll be rejected on pushes back in. I would suspect we're going to find responsive buyers the first time in here. I'm talking a little fast, so I get this. This is a larger concept, and I want to make sure that we get it down and we're clear on the understanding of why this is important. Okay, so until we're back in here, I'm going to assume, okay, particularly above 1880, that as we get rotations down lower, meaning 6 to 10 points lower, that we will see attempts at counter rotations up, and they could be significant counter rotations up, right? To this point, the rotations down have been very shallow, and they've been not giving us, every day we've had a point where we're willing to get long at actually quite a reasonable place. There simply has been no rotation. As a matter of fact, this morning, trading down from 1914 down to this 1909, 1908 level, this is the biggest rotation down we've had in the morning, I think in the last 5 or 6 days. Okay, so the pre-market's giving us a little bit of heads up, but don't get overly aggressive thinking, hey, this is it, and we're going to roll over to the downside, right? Give it a little bit of room to exercise give it a bit of room to exercise itself back to the upside. People are going to want to step in, right? It's been a thin market. Also, there's absolutely no econ today, unless there's been something I've missed, or there's been some individual company come out and pre-announcing, right? So what happens in those environments 90% of the time? What happens is we get movement in the first hour, right? And then after the first hour, we go to balance. So let's talk about what that balance might look like today. Really quick, going back to the chart. Oh, and you know what? I never completed sending the charts that sorry guys, hold on one second here. So let's save this really quick. Didn't mean to do that 2 times in a row. Copy, okay. Okay, I think I have hit everyone who needs the TradeStation file. If you have not, please hit me on Skype, and I will send it over. Let's continue this, the concept back through where we are at. Let's see, 209.25. Okay, let's see here. So this morning, first thing I want to see, can we trade above 1910? First question, right? So we're going to practically open apparently at 1910. So I will actually look for a trade above and a trap. I will also keep my eyes on NQ and see if we get any responsive sellers, and we'll cover NQ here in just a second, right? If we trap below on grade A or grade B, based on pre-market action, I'm probably going to take a short here, but it is aggressive. Okay, what isn't aggressive, and let me tell you what it is, why it isn't aggressive. Okay, the market, as we know, moves in 10s, 30s, 50s, and that 1910 was 50 up. We stretched just below it from our swing low to our swing high. It would make sense that we get a responsive move back to the downside, and taking the short is the harder trade. Okay, so I want to clarify because people get confused when I do this, right? I've just sat here and said the shorting has been very difficult. I don't want to overexpose myself. And then the next thing I turned around and said is, but we're stretched 50, and it's a logical place to get responsive sellers. So how do I want to integrate this back with each person's trade plan in general. How do you balance this? There's 2 ways to balance this. So first I'm going to address the smaller traders. Guys, if you're a smaller trader with a smaller account, what this means is you've got to take notes in situations like this and prepare yourself for when you're a larger trader and you can cut your size from, let's say you're trading 5 contracts to 1 or 2 contracts, right? To test the possibility, right? But if it stops you relative to what our normal markets are, meaning we're getting rotations of 10 to 20 points per day, right? That's what I would define as, quote, normal, okay? So that you don't get your hand chopped on a small account, right? Instead, you take it as a learning opportunity and you go, okay, if I shorted here based on we have a 50-point rotation from the swing low, this is where we're at, because this will not be the first or the last time we ever see this, right? And it looks like we're getting responsive sellers before the market opens. Then make active notes. In other words, make this profitable. If you were going to a university, or you were going to, or if you were on the job, right, you'd be getting paid less because you have less experience. So add this as a free experience and knowledge builder for future reference, because you will see this again in your markets. The 50 rotation down works just as effectively as the 50 rotation up, right? But what you can't do is, if let's say I have a wrong read, or this is just a head fake pre-market and we're going to shoot straight back up, right? Let's say that's the circumstance. What you don't want to do with a tiny account is get into a situation where there's no proven rotations for the last week, right? You step in front, this thing rotates up 4 points or 2 points or whatever your stop is and tags you out. And instead of learning anything, all you end up doing is being, often, for most of us, is getting pissed off and having the lesson missed, right? Because you stop paying attention to what the market behavior is. And I know my anxiety levels are already higher even talking about taking a short. Why? Because I'm afraid I'm going to put that short on, and it's going to sit there and creep one tick at a time and tag me out, just like it did yesterday. Remember, it came right up almost to a tick, and then rotated down before finally moving higher. Okay, and it was in this, and even in the trades in the zones, I've had a difficult time staying with the trade long enough to get paid to the downside the last couple of days. So that's for the smaller guys, right? Observe, make notes. Build a special section, 50-point rotations. Take a picture of what this looks like when we're at 50 so you know how to handle it the next time you're here. For guys with larger accounts, right, if you want to participate and say, hey, look, we look like we're getting selling pressure pre-market, looks like we get a move back to the downside, right, then what you can do is, if you're trading 10 or 15 contracts, right, go from 10 or 15 to 5, right, and then accept, hey, I may be burning 2 points or 4 points on these 5 contracts, but when you look at but compare that to what your P&L was 2 and 3 weeks ago when you were trading your full size. Can you afford to take a few small probes to the downside? And answer that both emotionally and financially, right? If the answer is yes, then you can take these test trades. If you know that it's going to upset you, right, you may want to take it, but you're honest with yourself and you go, this is really going to upset me if I take a loss out of the gate based on what I've seen the last couple of days, then you go to plan B, make it a learning experience, and still gain something from your time spent in front of the screen. If you make it smaller and still take the trade, then you can reward yourself by participating, but guarding your backside, right, and your equity, because we know the easier your shorts will come after we've established a downside pattern and we've broken back to the downside. The third option here is, right, where are we going to look to take trades for the long side if we start to roll over? Okay, so let's talk about that really fast. Okay, so the first thing I'm looking for is a trap up in this 1910 area to begin with, okay, above Tuesday's high. I'm looking to see, can we retest Globex high, yes or no, right? And then obviously the other question is, do we get below Globex low? And if they leave Globex low here, which I'll make a decision in 2 minutes on adjusting these zones, then I will make the change. Okay, so down below, where's the first place I am looking to find responsive buyers in this particular case? I will take a trade or attempt to trade at 1903 to 1905, right? What's the risk? Open drive lower. What does open drive lower look like? Well, first of all, we're gapping up, so the gap will be taken care of with 3 ticks for a point, right? So the first thing will be, we'll have 3 bars that'll move down like this. Open drive lower that is not accompanied by a gap out of range, okay, tends to not have as much force and tends to have better rotations back to the upside. So even if we have this, we could easily end up with a move back up like this with a move down, right? It would make sense that we do some backing and filling to the downside, right? So the first place I'd want to take a shot at taking a trade to the long side will be this 1905 to 1903.50. You'll notice the zone is half a point smaller. It's to compensate for the smaller ranges that we have, just like Tuesday's high zone is smaller as well, 1908 3/4 to 1910. That's just a function of the daily ranges collapsed. It doesn't make sense to keep a 2-point range when we're having 6-point ranges through the majority of the day, right? So I've shaved a little bit of that off, again with the idea being I'd rather miss than get in early and then not get my exit, right? So the next area down that I would look for potential long, this 1899.25 is an area. However, I'd rather have this 1897, 1895 would make more sense for me. Why? Because what this would do, it would cause a little panic back below 1900, right? It would bring us right into the open gap that we have here. And then if we can squeeze back above 1900, it would make sense that they take it right back to 1905 as a possible trade layout. That's what I would be looking for, right? Also, this would have a stretched roughly 15 points in here, okay? And if we get stretched 15, we've been having 6-point ranges. That's double the range we've had for the past week, pretty much, okay, intraday. So that would be a pretty good stretch, and I would expect a responsive buy. If we get to this 1889.50 to 1891.50, I will take a long automatically. I will be taking a long in here. I'd like to see tick divergence or price action at this point, okay? But I will take a long here, and I will take a long here, short of seeing an open open drive lower out of the gate. And if I see open drive lower out of the gate, what are my two options? So let's go back to that for a second. We identified as open drive lower. Where do the best trades come from at open drive lower on the gross majority of days? If you take all the past 300 trading days or the past 100 examples of open drive lower, right? The best trades have all come after 9:30 a.m., right? And the best ones actually occur at trap trades at first hour low, right? Those have been generating nice mirror image moves back to the upside. Okay, so again, if I see open drive lower, I have two choices. If I participate prior to 9:30, I have to accept that I might get swept through a zone. Okay, the gross majority of the zones have been working in the first 2 hours, even through this, have been providing a, with the exception of the last week and a half where it's been hard to get to 2 points, it's garnered some type of variation on that 2 points, right? After 25 minutes, most of the time we've been able to get 5 or 6 ticks, okay, at a minimum, okay? So I know that if I'm rotating open drive lower, I'm prior to 9:30, what do I want to see? I want to see out of that zone quickly, usually within 15 minutes. Why? Because I know there's a good chance if it gets thin and panicky that it can move straight through that zone. After 9:30 is when I want to start leaving my trailers for moves back up to the upside, especially if we get stretched 15 plus points, right? I can expect us to move back into that maybe -5 to -10 area of the chart for the day where it'll sit, right? I also know that after 9:30 we're likely to go into balance. And what can balance look like here? Okay, so let's say we were to have a range extension lower, right? Let's say we even got all the way back, all the way down here in the first hour, it got panicky. And then we get to this 9:30 area, right? So at 9:30, I'm expecting somewhere between 9:30 and 10:30 an attempt to push back up. But then after that attempted push back up, right, I expect the market to start doing some variation of this, either push up with balance, right? And in balance, when we break to new highs, they tend to get sold. And when we break to new lows, they tend to get bought back up. There's no news to push us. This would make a lot of sense today. Balance can look multiple ways. We can have balance like this, okay, where we just keep drifting higher. We can have balance like this. It is characterized by the NYSE tick being plus or minus 500, and then of course the worst balance is this, where we just do this all day long, right? So what I'm expecting today on the trade plan is to get some type of movement actually the first hour based on what I'm seeing pre-market. So first indication that there's been any kind of willing sellers anywhere, right? So I'm expecting to see a good range in the first hour, followed by balance after the second hour. So once I know that I see that we've moved into balance, where am I looking to get trade location? I want to see us try to push new highs or push new lows, and on those breaks of new highs and new lows, the tick should be plus 500 or minus 500 when it's breaking those new highs and new lows, and I would expect responsive sellers to come back in and push us consistently back to the middle, which is what balance is that we constantly move back to the middle. The only area I'd be concerned about is if we consolidate at the very bottom of an area for an extended period of time, that could bring a break lower, okay, and I'll call that out if I see it. Otherwise, my expectation is that we'll go from balance and that new highs and new lows will be pushed back to the middle, okay, and I'll call it out if we see it. I don't expect this to occur till after 9:30 a.m., okay. So I think I've got it covered. I don't think we'll see below this 1991 area. If we do, I'll call it out. There's another open gap sitting right there. And my guess is we're going to still close within this plus or minus 10 range for the day. There's just nothing to drive us down unless we just get long liquidation. Let's go to the 15-minute chart really quick. Okay, everything you should have marked on your chart. This 1903.50 right down to right here, 1897, this is all poorly auctioned. We can slip through here very easily, very fast. So this 1903.50 needs to be defended by the buyer on an intraday basis. 1903.50 needs to be defended. Okay, if it doesn't get defended, they don't hold it up. Okay, it can be a very easy slip through. I would not be looking to take contra trades through here. The other thing to keep in mind in this area, right, is if we slip through here easily, like this, right, we get down here, we can also slip back up easily the other way. So you want to pay attention to how this area, if we get in here, how it gets auctioned. Slip through down one way very easily usually means you can slip through the other way, right? The next area of concern on the charts, you should have this marked as thinly auctioned so you're aware of where they are. Right below this lip right here, 1895, it gets pretty hairy underneath 1895. There's really nothing to write till where we have this gap fill. But the problem is even the gap fill area was relatively poorly auctioned. Okay, it held twice, but really were poorly auctioned down to this area right here, this 1887. Okay, and then the next area where it gets kind of hairy is below this 1882, 1881 area, right? But that's a long way away, and I seriously doubt that we get there today. Below here, and then obviously you'd want to have marked on your charts just for further periods down, right? Everything from 1876 down to 1868.50. That's a very dangerous area to be taking contra trades in. Okay, it doesn't mean for guys that are newer in the room. Okay, it doesn't mean we can't come right into the middle of this and find responsive buyers and push back up. It just means that well more than 50% of the time, usually what the price action looks like here, is you can get responsive sellers, but usually it ends up either slipping through like this or just slipping through completely. Either way, it makes it very stressful to trade in these areas. And then the other part is if you are short, right, and you have a trailer and you get below this 1903.50, okay, go ahead and say, hey, I can target this 1897, 1898, maybe put it a point in front, right? 1898 as an area to cover, right? And then also realize that if you have, for guys who are really big in size and you can actually want to take the swing back to the downside, we have all of this, right, is poorly auctioned from 1882.50 in a bigger picture, right? 1882.50, we did not spend very much time in any of this all the way up. Okay, I don't expect it all to get re-auctioned. I do expect this to get re-auctioned at some point, this 1897 area, and possibly down into this, like I said, this 1889, 1887 area to get re-auctioned as well. Okay, looking on NQ really fast. Okay, so we're actually having a negative open on both sides. So we'll watch and see if we have an open drive lower, right? We're poorly auctioned right down to here from yesterday, 37.11. So that puts us about 10 points lower, right? To begin with, huge poorly auctioned area. Really everything below this 3700 right down to here to 3675 is a dangerous area. I would not be surprised to see a responsive attempt right here at this 3689, 3692, first time in. But this is all, you should have it marked on your chart, all of this was just crap. Okay, there's just nothing here to help you out if you're taking a contra trade back to the short side. Okay, and okay, so right now we are hovering and they're trying to get it back above what was Globex low prior to this last little dip. Okay, so I'm actually Globex low is 37.17 and a quarter, I believe. Let me make sure that I'm right on that. I am. And what you're seeing is they're trying to get it back to that 37.23, right? So there's three ways to look at this in real time. And NQ, they're obviously trying to trap, and I don't see a big response right out of the gate. Hold on one Second here. So the first thing that sellers want to see this morning, right? If we're having a downside move, you want to see it hold below the 37.23 will be our first clue, right? Obviously, we're having a hard time also with ES. Let me flip back over. Okay. That's not what I wanted to do. Okay, so you see they're making another push here to this 37.23. Okay, so they're going to want to make a push above that. If they can't make a push above that, look for a downside move. As a matter of fact, I'm going to take a scalp here right into that and treat that as, give me just a second, I'm actually taking a bit here at 37.21 3/4, 37.22, and I'll put a 5-point stop on this. So this is exactly how I'll use that scalp into this area, because if it's weak, right, it'll stop right away. It will not bust through this 37.23. I'll put a 5-point stop, so 22 gives 23, 28. Okay, so I will not want to see it make a push up for that Globex high. Now, basically, I don't want to see it close above. I don't want to see NQ closing above 37.23, right? TF has been the one that's made the big push. You can see that everyone sees the same thing that I'm seeing. Look at the price action here. Everyone's stepping in as a responsive sell at 37.23. Now, it becomes a question of, well, who's going to win this tug of war? There's no news to drive us either way, and we could end up just simply chopping right here. But it was a logical location for people to step in. Now we'll find out, right, who has more pressure on them. Was the pressure placed overnight and the Europeans were actually the ones that squeezed us above? And you can see we're getting the exact same thing, right? Right into Tuesday's high, and we're possibly going to end up with either an A grade or B grade trap. It hasn't set yet, and it's still early, okay? So taking the trade this early, there's no easy way to lay it out, right? You simply have to be willing to lose money early in the morning. There we go. We're getting the rejection right there. Right? And you'll notice we're not rolling straight down, right? So if you took 37.22, right, there's nothing wrong with taking a little bit off at 37.20. That's $40 in your pocket, right? It's almost one ES point and moving your stop back. I'm not doing that yet because I'm going to play to see if we can get the break. And that's exactly what we're ending up with, right? That overnight scenario where I talked about the trap already having occurred pre-market. Okay, so I'm taking a little bit here at 37.17 3/4. Hold on, I got to cover some. Okay, so I got 37.18, 37.18 1/4, and 37.17 3/4 were my scales, and I took about 1/4 of the trade off. Right now, I don't want to see it come back the other way. Is it a possibility that it will? Yeah, but basically, I'm going to see if I can't get a roll to the downside. Okay, and we're having the exact same setup take place. We've basically trapped out of the open on the first bar. So we don't. What do we want to not see? Now I want to see it about my stop be about a point above that swing high. Okay, so I'm going to take a little bit more here at 37.14. Okay. And so that's exactly what I meant by I'll let the market set me up for my trades. In other words, I didn't have a preconceived notion that we're going to roll over to the downside or the upside, but I let the market step me in, which is much easier, right? I let the market step me in to my trade. Now I'm going to move my stop to 1 point above the swing high, okay, which means basically I'm looking for potential open drive lower, okay, in which case the first 5-minute bar will be the high of the day. I have approximately 40% of this trade still on, so my stop and so I figured I'd turn this into a trading moment since we're already in, right? So my stop now is going to be 37.2450. Okay, so I'm now risking a point on the balance. I've already covered about 60%. I have a nice P&L to start the day. Okay, and this may be my only trade of the day as well. There's nothing that says that we have to continue to roll over. Right now we're trading below yesterday's highs, but still well above the lows. So we haven't tested anything. And then you can see they're already trying to step back in, right? We've just trapped below Globex lows here. at 1908 and a quarter. Okay, it's important that we stay below. And right now, this could simply end up being a reverse trap, right? Where they're going to take it, close on the high, and push back higher. Why am I not taking the reverse trap back to the long side in the bull market is a great question to ask. And the reason why is we're up 50. We need some kind of pullback. I'm not going to commit myself to a trap trade at the very, very top of the range after day of up, right? If this trap trade had occurred, let's say Globex low had occurred closer to 1900, and we traded 1895 or 1898 and then closed at 1900, then I think it would be a more effective trap trade back to the upside. And I hope that makes sense to everyone out there. Ron, sorry. Ron, I got it coming for you, buddy. Hold on a second here. There you go. So sorry, man. I missed it, Ron. I didn't see it pop up, so I hope you got it there, buddy. And guys, if y'all don't have the file by the time I start this thing, like don't wait later because I get obviously lost in trying to figure out what my trade plan is going to be as we approach the open. If you don't have the file, hit me early in the morning. You can even send the message early, right? Like right when I start, and I'll just pop it over to you if you don't have it, if I forget. So at any rate, apologies. Hopefully everyone has it. So I just wanted to go through. Let's expand this a little bit, and then let's look at the tick, right? Notice we're holding below Globex low, right? So right now, as long as we hold below Globex low, and you'll notice also with the NQ, I didn't have time to both tag ES and NQ, probably because I was doing this instead of trading like I should be, right? And so we've hit the first, what I had as a potential first point of inflection. And on NQ, what I want to see right now is I really want to see us hold below 37.1950. As long as we hold below 37.1950, I know that I've got a good shot at rolling to the downside. We'll see how long that's effective. Again, there's no news, so betting that we're going to get that roll and continue rolling to the downside is probably going to be a harder trade for me, right? Also notice that we have not trapped back above on, they're trying to trap this right now. Okay, so it's certainly possible, right, that if we trap above Globex high, right, it is possible, you got to keep in mind, that we can come up and test Globex high. We have not come close to doing that yet, right? This is still the hurdle. This 1910 is still the hurdle here, right? And so, right, and then we're not in a bear market. That's the other part. This is just a trailer. As a matter of fact, because we've lost our downside momentum, I'm going to cover a little bit more here at this 37.14. Again, that's 8 points on some of this. That's $160 a contract, right? And it is, again, it has not trapped at Globex low yet. Okay, it's trying to right now. We're still below Globex low, and I really think NQ is going to be the canary in the coal mine on this. And let's just see what it does, right? There's been no damage. Keep in mind, keep in balance, right? I've already come into this trade, and I just have a quarter of it left. Why? Because we didn't keep ripping, okay? And I've got to get risk quickly off. Now I can relax on this last quarter. If they tag me out and I lose a point, essentially, on the last piece, great. What's the other thing that I've missed? Well, I know that we're in a bull market, and I'm essentially ignoring my trap, right, at Globex low. But at this point, the trap has not set. They're trying to set it. They just haven't been able to do so yet, right? And then secondly, why take so much off early on if NQ if we're so extended? Well, shorts are easier in markets that are in established ranges, right? We're still in a bull market. I still expect people to respond in a bullish manner, right? We simply haven't gotten down to the point, right? This is where I'm looking to take my first response buy is down here in Tuesday's lows, right? I don't want to change my trading philosophy just because we're getting into these narrower ranges over the next couple of days. The flip side of that is emotionally, how do I have to prepare myself? If we get down here at 1905 and I'm not committed to my trade plan, meaning in NQ, I'm not committed to this trade plan, right? Well, NQ, if we get down to 1903, it's highly likely that NQ is trading 3,700. That means I'll lift 15 points, $300 per contract on the table. If I'm following my exit strategy, which tells me to scale quickly in a bull market, right, then if I do that, right, and I'm committed to my trade plan versus trading the market, then I'm fine emotionally. I executed exactly how I wanted to execute. On the other hand, if I'm one of these traders that goes, well, I want to see how far it'll go and I want to capture it, right? Well, if you didn't cover at 37.14, now you're trading at 37.18, right? That's $80 a contract. You're kicking yourself going, why didn't I cover, right? If it goes to 3,700, right, and you didn't cover and you covered 37.14, you're left in a position of, well, why did I cover? It went so low. You're constantly exposed emotionally to what's going on in the market. If instead you simply said, dude, my trade plan said scale at 4, 8, 10, 12, whatever it is on NQ or on ES, every 2 points I'm taking a scale, right? Or I'm covering the whole thing. If you took this move, right, this was essentially a trap at Tuesday's highs, what we discussed, right? If you took the 1910 short, which from what some of y'all are Skyping me, y'all did, right, and we moved to the downside and you got your 2 points, right, and you scaled the rest, you did your work. Day's done. Okay, you got paid, and now you can stand aside and let the market do what it's going to do. If it goes to 1904 and you torture yourself because you were short at 1910, okay, all you've done is put yourself in an emotionally compromised position for the following 3 or 4 days. Okay, and we are getting the responsive buyers that I thought we would get coming up. Again, the stop is at 37.2450, and I got most of this off at 37.22. So and 37.21 3/4. So, and it's like I said, a quarter of the position left. So it'll be approximately a 2.5 point stop on this last few contracts that I have remaining. And of course, obviously, the other side of that is if we trap above, I have to fully suspect or expect that we could possibly trade up to that 37.30. I'm just not interested in pressing my luck to the upside after so many days up in a row. I know that we'll correct, and when we do, just like I got it this morning, I'll get paid again. So does anyone have any questions while we're doing it? We might as well make it a semi-group coaching session because I don't think we're going to get a whole lot more. Now's the time, guys. Otherwise, I'm going to bail. Hey, you're very welcome, Harry. So at any rate, that was just literally how quick it was. We've already gone into this slow grind deal. We're not in a bear market. Like I said, I just had that read from the pre-market. There's absolutely nothing that says we can't go back up and test Globex highs. Obviously, we're testing this 1910. Becomes very important at this point, and you got to give buyers the edge on this deal. You got to give buyers the edge so that even if you're wrong, right, covering early on your shorts is a better. If you're going to make a poor decision, it's a better poor decision than pressing and saying, hey, this market's got to roll over to the downside. Anyways, that's all I got. I hope it was helpful. Let's see where this thing goes. I'll call them as I see them. Like I said, I think for the most part, we're going to have balance, particularly after 9:30 a.m. And I've pretty much already gotten it done for the day. I got paid. It's been a couple of days since I've been paid, so that's nice. And let's see if they provide any more opportunities for us. So anyways, we'll talk to you later, guys. Have a great one.